I'm Debbie Bindeman with Pearl Insurance. And Pearl Insurance is the underwriting manager and administrator for real estate E&O program that we write with the carrier XL, the two initials. That's our insurance company that we've been dealing with the same underwriting and management team for almost the whole time I've been with Pearl, which is 22 years. And by the way, as many of you possibly know, Pearl Insurance is the provider endorsed exclusively by the Massachusetts Association of Realtors. Also, almost the entire time that I've been with Pearl, more than 20 years. So we have a wonderful relationship with you in the association, you, the members, and our insureds all throughout Massachusetts. Thank you. So hopefully some of you on this webinar today are insured with us. And if any of you are not insured with us, we can certainly talk afterwards, or just call me or put your information in the chat and I'll get that. So a couple of quick things before we start. Just to give you some background information again about Pearl, so you understand some of the information we provide and the statistics we have. So again, Pearl Insurance, we underwrite for XL and we are the agents and we sell the product too. We are actually the second largest provider of E&O coverage nationwide. And again, we insure a majority of or a large percentage of firms in Massachusetts as well. But what that gives us is a lot of information and a lot of data over all these years that we've been providing E&O coverage, which actually is almost 45 years at Pearl. And we have information that we see the typical claims, the same things over and over, not only in Massachusetts, but nationwide. So that's allowed us to put together risk management discussions and tips and help you understand the risks that you face, which I'm sure you're well aware of, but I can reiterate some of our, what I call scary statistics for you, as well as the more important point is help yourselves and your agents avoid certain claims. And some of our tips are pretty self-explanatory and some are very simple, but just maybe hearing them in a different way and having that ability to relay that to your agents might help them avoid certain claims. So Sabrina, if you're ready, you can put up my little PowerPoint presentation and we'll get started. And hopefully all of you can see this. And I'll keep an eye on the chat if any of you have questions, or we can always talk afterwards. So as I said, the whole point is fortify your firm. And what I like to say is cover your assets. Learn how to avoid certain types of claims or mitigate the losses as much as possible. Okay, Sabrina, you could move it forward, please. And this is just simply our disclaimer. You don't have to read through it. It's just like your disclaimers that you use sometimes or see and sometimes in your business. Basically says our information is proprietary and that's it. Okay, you can move it forward. Thank you. So briefly, this is what we're going to talk about. Just again, I know you're familiar with E&O coverage, errors and omissions coverage, but what is it really? What's it meant to do? What's it not meant to do? As I mentioned, some of our scary statistics, so you can see what your chances are of having a claim, some of the unique issues that we're seeing again, and a couple things that have popped up in Massachusetts, and then most importantly, our risk management tips. And I will try to sprinkle those throughout, and you'll quickly gonna learn which couple of our tips are the most important. And by the way, I did forward to Sabrina, but I have as well and can forward to anybody who asks. First of all, I can give you our PowerPoint presentation if you prefer, but we also put out some PDFs that are our typical claims, our risk management tips, and some other information. So if any of you would like that, we can contact each other, or you contact me or Sabrina, and then I'll get that information to you as well. Okay, Sabrina, thank you. So just overview, what is errors and omissions? What is it meant to do, and who's covered, and those couple of quick things. So the intent of this professional liability and errors and omissions coverage, E&O, errors and omissions, professional liability, they're all kind of interchangeable terms. But professional liability coverage is basically exactly what it sounds like. It's a policy meant to cover real estate professional services that you provide for others. Okay. And the others would be buyers and sellers, even banks, if you're selling bank-owned properties. I mean, most policies will cover those kinds of transactions, including our policy with Pearl. And also, here's a little side note. There are a lot of other E&O providers writing errors and omissions coverage. And I think it's very important for you to understand that some carriers use a generic miscellaneous E&O policy, and then they try to make it fit realtors by adding some endorsements and things onto it. I'm not saying it's a good thing or a bad thing, but in our opinion, the ideal policy, of course, is a policy written specifically for you, for your profession. So with Excel, Pearl and Excel, our policy is a real estate E&O policy. And again, there's several other carriers who do write a real estate specific E&O, but then there are many others who use a generic policy. So just so you're aware of that. And if you ever have any questions or want some help to analyze your coverage, we're happy to do that. And I'm happy to help you too. But again, the intent of the policy is really to cover professional services you're providing for others. So if somebody alleges that you made an error or an omission, or you made a misrepresentation, which we're going to talk about in a couple of minutes, and now they've got a problem and they're suing you, and typically the buyer, to compensate them in some way. I mean, that's what the policy is meant to do, is meant to defend you in those kinds of lawsuits. And who is covered, what is covered, and again, professional real estate services that you're performing. And most policies, including our policy, by the way, give back some coverage for, like other coverages, as you see at the bottom here, for agents, for you, the agents who want to maybe do your own transactions. Almost all the policies have some give back for that as well. Typically it's excluded and then give it back in a limited amount of coverage. But again, the policy is really meant to cover your real estate services for others. And our policy, and most policies, obviously cover all the independent contractors, owners, officers, directors, employees, and some policies, including our policy, extends that coverage out to your independent contractor's own employee. So if they hire their own assistant, not a direct employee of your company, maybe just their own personal assistant, maybe they have a big team operation, those employees are also covered. It's really everybody performing real estate services on behalf of the company are covered under this policy. And another note, that is something that is unique with professional liability, is unlike a homeowner's policy or an auto policy that only covers that 1 year of time, professional liability, they call it and refer to it as a long tail line of insurance, because it really is covering the past. And that's why it's so important, if you decide to change carriers, to make sure they pick up all of that retroactive coverage, all that back to the coverage date that you first maybe started your companies or first had coverage continuously through now. Because realistically, in professional liability, especially real estate, you may not have a claim for 2 or 3 or some years after a transaction occurs. So it's really a policy not only covering what's happening right now during this year of policy coverage, but all the transactions that have ever been done by your company. So that's something unique about professional liability. I just want to point out to you, which I might as well jump ahead and leads to one of my most important risk management tips. And that is document, document, document. And I'm going to stress that throughout because, again, you have transactions maybe in your company that go back years. What if a claim comes in now and that agent who did that transaction is no longer with your company? The only thing we have to defend you is what's in that file. And if you don't have a well-documented file and it comes down to a claimant, he said, she said, and you don't have any documentation to prove otherwise, that claim's going to win and you're going to pay. So you might as well just write the check or have us write the check and you pay your deductible. But that's why I want to stress the importance of having well-documented files. If you don't already, start it immediately. Keep well-documented files with the files that stay with your company. And if any of you are the agents, of course you can keep your own files and information, but document the file that stays with the company so that if in the future there's ever a claim, that our carrier or whoever's with you can defend that claim. Okay, so that's who's covered, what's covered. A couple of other, go back one more second, sorry. A couple of other quick things about other coverages that, again, generally this policy is they're very broad. They cover, working with buyers, sellers, real estate transactions. A couple of things that are unique and a little bit different are power of attorney. So our policy and most policies I've seen do not cover power of attorney. Okay, so if you take on that power, if someone asks you to make some decisions or fill out documents or go to their closing because they're moving or they've moved and relocating and they can't be there, just know you cannot be, there is no coverage typically under an E&O policy for a power of attorney. Ask them to ask anybody else, okay? Because if you make some mistake or error or something they don't want happening under that power they've given you, but everything else in your real estate transaction was perfectly fine, it doesn't matter. There's not going to be any coverage if they sue you. And likewise, commission disputes, amongst yourselves, there is no coverage over commission disputes because, again, the policy is for real estate services you're providing. And frankly, there's nothing in the policy language that says you even have to have a commission to have coverage. That has no bearing on the coverage. So commission disputes are not covered. A couple of other just quick areas for any of you, the broker owners, to understand. Again, most policies give back some coverage for your agents or you if you want to list and sell your own residential properties, even a commercial property, there's some coverage give back. But agents who are involved in constructing and developing, and I use the term, flipping, like renovating properties and flipping them, that it's starting to get way outside of the box of what the policy is meant to cover. And we can add coverage for that. Other carriers can as well, but it's not typically included in the policy. So I just want to give you a little alert. If you have any agents or you yourselves are involved in construction and development, and then you're also your own listing agent, you may not have coverage in your E&O policy for the listing, okay? The best risk management tip, I'll throw another one at you, is ask any other agent to be your listing agent. And I will stress that a little bit more in a minute, because not only, first of all, that's the only way to get coverage, perhaps, as a listing for that transaction. But also, we know from our experience when there's an agent-owned transaction and a claim on that, it's much harder to defend and it's much more costly because it's harder for you to say, as the listing agent, I had to rely on what the seller told me. You know, I didn't know about that condition of that home. But if you are the listing agent and you own that property and you're selling your own property, especially if you're just redeveloped it, you absolutely know about that property condition. And it's really hard for you to separate yourself out like that. So it's harder to defend you. And we end up having to pay a lot more to not only defense, but typically in, you know, damages and settlement, because there's just no way around it. So it's the best risk management tip is just ask any other agent to list it, because then they have some of that defense. They can say, well, I was just representing the owner. I relied on what they said. I relayed everything I was supposed to. So that's just one other risk management tip. And then bodily injury and property damage. There is coverage in our policy, as well as most others I've seen, for the unique feature of real estate, which is an open house or having a lockbox on your property. So we do provide coverage for property damage during an open house. Again, or if your lockbox is on the house and someone comes in during an open house or goes to see the property goes through your lockbox, and they cause some property damage or theft, by the way, there is coverage in our policy language for that. Likewise, if somebody does come into the property and gets hurt accidentally, and they may say, well, it was because you provided an unsafe environment, you know, during the open house, maybe, there is coverage as well. Now, ideally, the homeowner's policy should pick up those types of claims. You don't really want them on your E&O policy, but just so you know, there is some coverage for that, okay? If the homeowner says, no, I'm not gonna file this claim, you know, you held an open house, you allowed somebody to come in here and break something or steal something, or you didn't wipe up the floor, somebody spilled water and then they slipped and fell in my house. No, I'm not gonna put that on my homeowners. You're going to take care of that. So we do have claims like that and we pay them. We take care of it. So just so you know. Okay. All right, Sabrina, think you can move it now. So here are what I call our scary statistics. And this hopefully will give you some idea of what to kind of quantify your risk and see what type of risk you actually have, because you may not think, oh, I'm never going to have a claim. Well, the reality is, you know, it's a kind of like all statistics. It's a law of large numbers. The more transactions you do, the longer you're in the real estate business, I hate to say, the more likely one of those transactions that you've done could turn up at some point into a claim. And what the NAR says, this first statistic is 1 in 4 agents will have a claim during their career. That's nationwide statistic. And when I first started at Pearl, as I mentioned, 22 years ago already, gosh, time flies, that statistic was 1 in 5. So it's gotten worse, okay, in other words, which is not a great thing because, you know, in our society, anyone can sue anybody for anything at any time. Doesn't matter if there's any fault, which again, I'll get into in a second, but anybody can sue you. So we are definitely seeing an increase in frequency and severity of claims right now. And another little side note, when the economy is experiencing what it's doing now, you know, high interest rates, some failed transactions are falling through for various reasons. Maybe now all of a sudden, some of these people can't afford these mortgage rates because of what's going on in the economy. Unemployment is actually low, but when unemployment is higher, that triggers a lot more claims. But we're in such a a unique situation right now, having come off of what the NAR refers to as a complicated market, which seems to be getting more complicated. It tends to drive claims. So I just want to make you aware of that. Perhaps you've never had a claim and all of a sudden now, you're being threatened, and that is not uncommon. So just so you know, it's not just you, it's everybody. It's nationwide. So here's another couple of statistics to kind of hone in on what we're seeing. 3 out of 4 of our claims, the majority of claims, are the buyer suing the seller and their listing agent. So that should let you know that if you or your agents are mostly working, or those people who are mostly working with listings, with sellers, your risk of having a claim is higher, because most claims are the buyer suing the seller and their listing agent. That's just a fact. So unfortunately, that's what we see. And the average claim now is actually a little bit higher. I just changed this. I just got a little update on this statistic. Our average claim cost now is about $45,000 right now. And that is mostly legal fees. It's not even expenses. I'm sorry, or damages. It's mostly expenses, meaning legal fees, to get you out of claims. Because as you see, just skip down a little bit, 7 out of 8 of our claims are frivolous. You are not at fault. You and your agents are doing a fantastic job. You're revealing everything you're supposed to reveal, not misrepresenting, disclosing everything, dotting all the I's, crossing all the T's, doing everything properly. But unfortunately, again, anybody can sue anyone for anything at any time. Doesn't matter. Okay. So we are seeing higher expenses. And the average time to settle a claim is about 1.5 years. And that seems like a long time, probably longer than you may have expected. And that's because the court system, especially now, again, I hate to keep saying, coming off this pandemic and during the pandemic, it made delays in, if courts were closed, first of all, kind of transitioning to doing things virtually was a problem. But typically when there's a claim or a lawsuit, the claimant files it, then there's a certain number of days to respond, then there's more days to respond, 2, 3, 30 days, 60 days, all of that adds up pretty quickly. And so having the average time to settle a claim 1.5 years goes by really fast on the court side, the claimant side, the legal side. However, here's a couple of other side notes about that. For you or your agent who's dealing with a claim for 1.5 years or more, that is so draining on you. And not only financially, think about these other consequences of a claim. It's not just money. It's emotional, first of all. You're thinking, oh my gosh, I've done everything for these people. I can't believe they're suing me. Or I revealed everything. I disclosed everything. I was so careful, but I can't get over the fact that I'm being sued for this. This is so frivolous. So it's already emotionally draining. It's starting to take time away from your other clients that maybe now you're working with. And especially going back to document. What if you didn't have a well-documented file? Now you have to go back and search through emails or somehow try to recover texts or things that you had in your phone that you were, my little pet peeve about, you shouldn't be texting important information, but perhaps that happened and now you've got to just go recover and dig back into your notes and also your memory. If you're trying to remember exactly, what did I say? I know I always say this, but maybe I said that. So, all of that stuff just drains on you in that 1.5 years worth of time. And also, and here's another side note about claims, your reputation. Your reputation is important. and you don't want to tarnish that in any way, or the reputation of your company, to have that company be the one who's known as, oh, those agents are terrible over there. I've heard terrible things. They seem to always have issues and claims. And yeah, I was on the other side of that transaction and it was a mess. I'm simplifying it, but your reputation is very important, and that could be a consequence of a claim. And then one more quick note out there to you broker owners too. Sadly, just like in auto, for example, you have a lot of accidents. At some point, your carrier might say, sorry, we're not going to cover you anymore. You're going into the high risk pool of carriers now. Well, there's similar consequences in professional liability. I mean, most professional liabilities, including carriers, including XL, very, very, very rarely will non-renew a company. I mean, I hate to say that your premiums might go up for sure to kind of recoup some of that claim expense, but it isn't common to non-renew unless you are very, very egregious and have a real issue with frequency and severity of claims. And then, yeah, you're going to have to go out into the high risk pool, just like in other lines of insurance, like auto. And for those of you who might be a franchise, I mean, you have to have insurance. It's not an option not to have it. So now you're really perhaps paying a lot, and or being forced to take a very high deductible because the carriers don't want to absorb all that small stuff anymore and force you into higher premiums and a higher deductible. So now you're forced into taking on the majority of your risk instead of transferring it to an insurance carrier, which, by the way, is the definition of insurance, is transferring your risk to somebody else in exchange for paying a little premium. They take on all that risk for you, or the majority of the risk. Okay. So again, 7 out of 8 of our claims are frivolous. Interesting statistic, I think, is the average number of years of experience of realtors who have claims is about 7 years of experience. And that's for us, for our records, which you might have thought, oh, it's going to be the newer agents who are going to have the issues. Not typically. It's those who have been around for a little while, maybe just long enough to think they start to know it, and maybe slack off a bit and not be as cautious about what they say, which again, we'll talk about in a second. Those are the ones that we see typically have the claims. So that's interesting. And then the majority of our claims are settled out of court. They don't go to court. We try to settle them ideally in mediation, which is a little less costly, but whatever means it takes. We try to avoid court because that's very unpredictable. Who knows what happens if you get in front of a jury, whether or not you're innocent. It doesn't matter. The sympathy of the jury might just be in favor of the plaintiff that day, so that's what happens. We try to get rid of these quickly and easily as much as we can, and the least costly to everybody involved. You, of course, the carrier, but also making an equitable and friendly, if you want to use the word friendly, decision to compensate, so that it just doesn't drag on. All right, now you can skip ahead, Sabrina, because I want to talk about the most common type of claim we see, and that is misrepresentation, okay? And I will tell you about 75%, the majority of our claims are misrepresentation, okay? Mostly it is innocent and negligent, all right? And I'll talk about those in a second. But let me also let me explain that first, then I'll give you my 3-prong test. So innocent misrepresentation is simply when you don't watch what you say okay? And you step outside the bounds of your profession as a realtor, and you might make comments that should be left to some other professional, okay? Because you are not a home inspector, you're not a lawyer, you're not a tax advisor, or a mortgage lender. You know, those are other professions. You have to shift the risk to those other professionals. If your client is asking you questions, you have to really be cautious about what you're saying that's not stepping outside of your bounds. And I know this sounds so simplistic, but this is so common. And also keep in mind that when you're working with a client or a buyer or a seller, most likely a buyer, and especially if it's a first-time home buyer, they've never done this before. They're clueless. They don't know what they're doing, and they're relying on you heavily. And they listen to every word you say, and they're not double checking because you're the realtor, you're the expert. So what they're hearing may possibly not be what you're saying. So that's another something to keep in mind, risk management wise, about documentation. Maybe when you're giving some information or they're asking you a question, maybe you should follow up with an email and outline exactly what you said. Make sure they understand your terminology, explain any acronyms that are common in real estate. So make sure that they know what's going on so that they don't misinterpret what you're saying innocently, okay? And then negligence is simply when you don't use standard proper care to determine if the information you're giving them today, right now, when they're asking a question, is accurate, especially things that can change over time. And my best example of that is school districts. And we've had so many claims related to school districts and boundaries, okay? And here, I'll give you this example. Well, actually, let me tell you about intentional fraud, then I'll go back to that example. Intentional misrepresentation is fraud. If you intentionally misrepresent or intentionally do not reveal something or do not disclose something that you know should be disclosed, or something and your seller doesn't want you to talk about it, that's fraud. Okay, you can get dragged into that claim so easily. So fraud, by the way, intentional misrepresentation is not covered under E&O coverage. It's not. You act fraudulently, you're not covered. Now, keep in mind that typically in a claim, everybody's getting sued. The agent, the broker owners, the company, maybe the franchise vicariously, everybody. So if it's determined the agent had acted fraudulently, we will still defend the company on that claim, but the agent's going to have to hire their own attorney because fraud is not covered. You can't buy insurance to be fraudulent. It's not possible. But negligence and innocence, those are the most common things we see. So what I was going to explain to you and what I said earlier about anybody can sue anyone for anything at any time. Doesn't matter if there's grounds to sue you or not, right? Well, what I call our three-pronged test to determine if there actually are grounds to sue you is simple. It's very simple. First of all, the first prong is you make a representation. You give information, okay? And whether it's negligence or innocent, you're giving information to your client, right? The second prong is now your client relies on that information to make their decision. Again, it could be a first-time home buyer. They're not double checking you. You tell them something, they rely on that information now, and they make their decision. The third prong is now they're harmed. Now they've got a problem. Now there's some kind of damage. and they want you to take care of it because, again, you said something, they relied on it, and now there's a problem. Those are grounds to sue you. That's how simple it actually is to have a claim against you if in those circumstances, if they occur. So that's why, again, we stress the importance of avoiding negligence and double checking something like school systems. So here's my example, and we had this happen. It was a buyer who wanted to move only mainly because their main focus was to get their child into a certain high school. So they worked with their agent and said, this is our top priority. I mean, they stressed it a lot throughout the process that we want our kid to go to this certain high school. So the agent started showing them properties all around the area, different neighborhoods, and they settled on one house they found that they loved. And in the past, those are the key words, in the past, that neighborhood went to that certain high school. They were in that high school's district. Well, of course, I know you know where this is going. Nobody checked. The agent didn't double check, nor did the agent shift the risk back to their client and say, I know you like this property. You better check and make sure it's still this high school. Either plug in the address, to the school's website or the school system. Make sure it's still going to that high school. So the agent didn't do it. The client didn't do it because they relied on the agent who said, oh, yes, this neighborhood goes to that high school. And sure enough, they went through the process, bought the house, went to register their kid for school. And of course, it was redistricted. I can never say that word, redistricted. So they sued their own agent, their own buyer's agent who helped them for the cost of 4 years of private school education, and we paid it. And believe it or not, yes, because it was complete negligent misrepresentation. All it would have taken was a phone call or a web search or the agent doing it and documenting it to say, no, it's not that high school, so you better go find another property. None of that happened, and that kid went to private school education with our dime. So that happens, and that is not uncommon, things like that. So especially things that change and can change over time, like school systems, other planning, like parks and planning commissions and roads going through, and looking ahead to long-term plans in an area. So just make sure you either alert your clients to some of those resources, be the source of the source, give them resources to go check these things that are important to them, especially if they say that's their priority, school systems. So, or if they say, yes, oh, I love this property, it's got this gorgeous view and all these trees behind it. Well, maybe you should recommend, you better check, make sure there's no plans to have all of that torn down, and maybe there's a development going in behind your properties. So things like that. You just want to, of course, you're not responsible to know everything, but those kinds of things, especially things that change, school systems and things, it's not a bad idea to document, recommend they check into those priorities for them so that it avoids potentially a claim for you. All right, so a couple other quick things, because believe it or not, we're starting to get short on time. And a couple of other unique things that are facing you in nationwide as well as Massachusetts. So I actually want to mention virtual transactions. We've had some issues around the country with all cash transactions even. And in the very beginning of the pandemic, there was, of course, scammers out there taking advantage, claiming they were the seller of a property, just like you see some of these, I'm sure you see problems on, like, say, Craigslist, where somebody will spoof a whole property or a site or a renter and say, oh yes, I'm the owner of this property, you know, send me your check and you can rent this gorgeous Airbnb, you know, or this bed and breakfast in, you know, in downtown, you know, Boston, really cool neighborhood, you know. So they advertise these things, and unfortunately people fall for it, wire their money off to some bogus account, go show up at that property, and it's not really even, it's not even available, or somebody's living in it, or it's all just fake. So we've had a lot of virtual issue transactions that have caused problems for real estate companies. But the bigger thing that we're seeing right now, a couple things, I probably should have mentioned it on this slide, is fair housing related issues. We're definitely seeing an increase of fair housing issues nationwide related to, you know, race, sources of income issues, realtor, you know, talking about whether or not a company accepts all programs, meaning related to like Section 8 programs. These testers are out there again, these fair housing testers, trying to trip up your agents and you into commenting on things that you have to be cautious about. You have to, if somebody says, do you accept all programs? And you should be saying yes, I guess, because if you say no or say, I'll check on that, you know, there could be an issue. And these testers are out there trying to trip you up with relation to sources of income, race, disabilities, all the fair housing protected classes. And the other thing we're seeing a lot of, and we're definitely seeing this in Massachusetts, a whole rash of these lawsuits, are ADA compliant websites, which is a whole thing. Who knew or who thought about recently coming up with this law firm actually here in DC. And by the way, I'm right outside Washington, DC in Maryland. And there's a lawsuit or a law firm here that is, again, spreading their net nationwide, looking for not only agents, individual agent websites, but companies' websites that are not ADA compliant for the visually impaired. And they'll claim that, you know, they went on your website, it's not ADA compliant, so we're going to sue you, you're going to pay these fines, and you better fix it. So if you get any of those kinds of threatening letters or any correspondence with regard to your websites, talk to your insurance carrier right away. We have been able to successfully get rid of these. These are frivolous claims. I mean, most of your websites are compliant. And by the way, if you have any questions about whether or not they are, the NAR has a lot of resources, and I believe Massachusetts Association possibly does too, but I know that the NAR does. So you can make sure that your websites are compliant with all the ADA requirements. And then the other couple of unique things that we're seeing in the country, and actually just had this ask our claims representative, who is fantastic, Maggie Padron. I don't know if any of you, hopefully none of you know her, but if you do, she's terrific. With relation to cutting down trees, of all things, accidentally cutting neighbors' trees. And as she said, especially if when the realtor, and sometimes this happens, maybe the realtor is helping to get the house prepared for listing, and maybe helping the owner and hiring some contractors or others to come in, you know, clean up the house, maybe help prepare the yards, cut down trees. So she said we actually recently did have a claim where a realtor hired a tree cutting service, and they accidentally cut down some of the neighbors' trees, and the neighbor sued, and we paid it. So just so you know, that's a kind of unique claim scenario, but we've seen it. All right, so let's move to the next slide. And also, by the way, again, we produce, and I can email any of you who want it, a couple of different PDFs that outline kind of our typical claims. Like I mentioned, misrepresentation of school districts are very common. Boundary misrepresentations, not getting survey, I'm losing my words, getting a proper survey, or inadvertently, and I know this sounds again simplistic, saying, oh yeah, that tree line back there, that's the boundary of that's the end of our property. You can't say that. Obviously, you know that that's silly because trees move and they grow, and who knows if that tree line is actually the real boundary. So things like that, water intrusion. We've just got a lot of typical things. Sewer versus septic, by the way, that's one of the most common things that we see are sewer versus septic claims, which typically is, it's represented that the home is hooked up to the city sewers, and the buyer buys the property thinking that, and then come to find out in the possibly not too distant future, when their septic system all backs up and they realize, oh no, it's on a septic system. And frankly, I don't understand how that is not known, but we see that every day, almost every day, somewhere in this country. There's a sewer versus septic type of claim, and those can be very costly because it's depending on how far the lines are that you have to hook up to the city water systems, the sewer systems, that could be very costly. And we've paid, $60, $70, $80,000 in claims to because it was represented that property was hooked up to a city sewer system, and we've had to do it. So those can be very costly, just so you know. That's one of our more common things. Excuse me. Okay, but then here we are back to my risk management tips. And as I, excuse me, allergy season, I guess, is starting again. As I've mentioned, we put out a document that's got our 12 risk management tips, and it's pretty self-explanatory, but these are the highlights, in my opinion, of our risk management tips that are, of course, providing full disclosure of all material facts to a home. And I know in every jurisdiction, there's specific differences perhaps about what is supposed to be disclosed or not. Things, like, again, tragedies in a home or certain things about a home. But all material facts about that home, of course, should, or that property, could be a commercial property, should be disclosed, okay? And then never act outside your area of expertise. As I mentioned, innocent misrepresentation. Shift the risk, take it off of you as much as you can, not only to other professionals who are lawyers and doctors, lawyers and home inspectors or other professionals, mortgage lenders, tax advisors. Just be careful what you're saying so you don't innocently misrepresent a fact that really should be left to some other professional. And then negligent misrepresentation to avoid. Watch what you say, and don't be afraid to say, I don't know. Okay. And I will admit, I use that all the time, because especially things like in real estate for you, insurance for me, it's very important to interpret policy language or coverages properly. And I document it as best as I can too. And so should you. If somebody asks you a question, double check it. Even if you think you know the answer, you can say, I believe I know the answer, but before I give it to you, let me double check. Or better yet, again, shift the risk and say, I'm not sure about that school system today, but here's the information to the school board so you can check. So I think that's very important to do that too, and document it so that you can avoid some of these claims that we see all the time. And then finally, of course, our well-documented file document, document, document. And I can't not stress that enough, especially because the nature of professional liability is to cover all the transactions you've ever done and into the future, so for agents who might leave you in the future, to document those files now so that when or if a claim ever arises, we've got the information there to defend you and get you out of it. So that's probably my biggest risk management tips. And Sabrina can go to the last slide because it's got my contact information, which we can leave up for a couple minutes. So if any of you have any questions, you can definitely call me. You can email me. Also contact Sabrina. She has my information, and I can forward any of our risk management documents to you. And then hopefully some of you or many of you are insured with us, and I'll say hello to you if you are. And if you're not, if you'd like us to offer a quote, we're happy to do that too. So I can thank you all again for everything. I guess we're stopping a few minutes early, but I think I've covered everything I wanted to relay to you. Hopefully it's good information and ideally help you with some risk management tips and help you avoid some of the claims that a lot of your colleagues are experiencing nationwide. So thank you all very, very much. Have a great afternoon. Bye.